Well, are we about to see inflation re-accelerate? Hi there everyone, welcome to the Traders Circle weekly market update. Today is Tuesday the 8th of August 2023, and just before I get into it, you do need to be aware that anything I say is only general advice. It does not consider your personal financial circumstances, and you have to decide if what I'm saying is appropriate for you. So the big news this week in Australia is the start of the Australian company earnings reporting season. So it's going to be a pretty big one. We've got plenty of companies reporting. Some of the first majors to report will be CBA and Suncorp tomorrow, and that'll lead the sort of tune for the banking and financial space this season. Interestingly, Suncorp will be a particular one to watch. They've been knocked back by the ACCC with their ANZ, the sale of their banking business to ANZ. CBA will be an interesting one as well, just to get a general feel about how banking is going in Australia at the moment. But in general, I think this will be a season where we see strong stock-specific movements. The reason for that is a lot of stocks have largely moved with the market recently. They've just gone with the market, they've gone with the trend, whatever the ex-show is doing, they've been doing. And this is the season where people, scratch their head, they take notes and they go, well, this stock hasn't been performing like the market. It's been doing better. It's been doing worse. And because we've seen such market-driven movement, this is the month where we might see some stock-specific movement. So I know with a lot of the traders I work with, a lot of the trades that we look at, we're looking to do, each-way trades on some of these reports, because I do think we're going to see large movement. We did see some particularly large movement out of James Hardie today. They delivered a quarterly result, and they finished 14% higher on the day. So the Australian company earnings season, it's starting at the moment, and if you are considering a trade or investment at the current time, make sure you first check the company's reporting calendar, and make sure, if there is a report, you've considered how that's going to affect your trade. We've also got a US season, which is ongoing. It's now mostly complete, a little bit over halfway. And as if you've watched my videos, it's a good but not great season. The season was good enough to not really send the US market lower, but it wasn't great enough for them to continue on the uptrend coming out of June and July. So US shares have actually sold off a little bit over the past week. I don't really think that's too much down to the reporting season. Their reporting season, like I said, it was fairly good, but not great. It was enough to hold them up there. But instead, they've been coming down, at least in my opinion, because there's worries around a re-acceleration of inflation. So on Thursday night, we're going to see the release of US CPI for July, and it's actually expected to rise from the June CPI number. US June CPI came in at 3%, which is barely above target range, and that's the trend that the market, that investors, that central banks, that everyone really wants to see, and that is inflation coming down. This month, though, it's expected to tick up a little bit to 3.3% on an annualized rate. And that is not the direction people want things to head in, especially after the rapid pace of interest rate rises we've seen in the Western world. So this data, in combination with some other recent data, we had better than expected US wages growth. We've had some fairly strong US data in general. There is a worry that we're going to see a reinflation of inflation, dare I say, or a bounce in inflation. And, the worst thing about that is that it means that maybe there will be more interest rate rises. We've seen rallies for the past few months based on a view that interest rate rises are peaking. Well, what happens if that narrative is wrong? What happens if there are more rate rises? And I think there's been a bit of nervousness, especially in the US across the past week, and we're seeing investors take the opportunity to lock in some profits, close some things out right at the top of the range, and basically sit off the table for a while. Now, one of the big reasons we've seen a bit of a bounce in inflation this month, or we're expected to, is that oil has jumped. We saw oil fall for 12 months from June 2022 to June 2023. And that fall in oil prices, either directly or indirectly, brought inflation down. Not only is it very, very important, for the price of petrol or, the price of transport, but really it's a cost that informs the cost of many, many other goods and services. So when oil's coming down, the cost of supplying goods and services comes down. And that's helped inflation come off over the past 12 months. However, In late June, we saw an announcement from Saudi Arabia in combination with Russia that they were going to lower their oil production. We saw oil hit maybe a technical support for US West Texas Intermediate crude, and we saw oil bounce and rise 20% throughout the month of July. And that is one of the key reasons that we're likely to see a slight tick up in CPI growth in the US on Thursday night. And like I said, one of the key reasons why many investors are starting to fret a little bit about a potential for reinflation. So this is a chart of US oil, West Texas Intermediate spot oil, and from about June 2022 I should say, to about June 2023, we saw oil fall dramatically. In fact, it fell almost 50%, from up above $120 US a barrel down to the sort of mid-60s US a barrel. So that was a very, very strong downtrend there. But if we see the very end of this graph, the past month, which is the month of July, oil has actually rebounded a little bit over 20%. So hopefully you can see this this data here, but from the low right at the end of June to now, it's up almost 23%. So it is quite a large bounce in the price of a key commodity in 1 month, and like I said, that informs the price of a lot of other goods and services, and this is not what people will be wanting to see in the battle against inflation. So if we have a look at the US market, they've been rallying for the last sort of, dare I say, 5 months now, roughly from mid-March up until right around the end of July, and they topped out on the S&P 500 at 4,600 index points. Across the past week, there was mostly selling. So from Tuesday, Wednesday, Thursday of last week, the US market fell from that resistance and came back down a bit. There was some overnight buying in the Monday session, but it wasn't enough to breach this previous support, which may now be acting as resistance. So our expectation would be for further selling in US shares, perhaps down to this longer term uptrend line, the hot pink line here, perhaps down to the potential support at 44.50. So technically, perhaps a little bit more bearishness in US markets. I'd be looking for them to come to these key levels and then see what happens there on the S&P 500. For our own market, we were a bit late to the rally. In fact, we only really joined the rally in mid-July. And like we said, US markets had been rallying for about 6 months, 5-6 months. Our market only really rallied for 1 month. We found some resistance at 74.70 roughly, and not even the RBA holding on interest rates was enough for us to breach through that level. So we've come back down, we've fallen off over the past week, and we found some support at roughly 72.90. That level would have to break for further selling to look likely, and if it does break, I'd be looking for a move towards the moving averages at 7,200. Should we bounce and rise from here, first target would be 73.70, and then if that breaks, 74.70 again. Like I said, the big event for Australian markets this week will be the reporting season. And there's none bigger this week, at least, than CBA's report tomorrow. If CBA has a standout result, and it is expected to deliver a record profit, then we could see the banks, which make up a little bit over a third of our index, help drag the market higher. So at the moment, I'd be looking at that CBA report, and if I was a bullish investor, I'd be praying for a damn good result. That's it for this week, guys. Hopefully you enjoyed. If you did, let us know. If you didn't, keep it to yourself, and I'll see you in the next one.